Welcome to the first episode of the Hills Property Panel, joined by Dr. Andrew Wilson, Chief Economist, and Stu Benson, #1 auctioneer in the Hills District. The reason for putting this video series together is to assist people to make informed decisions. We'll be providing up-to-date factual information about the property market, specifically for the Hills District, but it's also important to hear about the national and city-based influences. So we'll bring together all the points from Dr. Andrew Wilson and Stu Benson today. There's a lot to cover, and a good place to start is with you, Dr. Andrew. You've been in the industry for many years as a chief economist.
Yes.
What is it most important to have a good understanding about at this point in time?
Well, I think that specifically now we're moving into a different phase of our housing market cycles. That durability, I think, is the key word, particularly for that Sydney market. Of course, we know we've had our first increase in official rates for over 11 years. It's been a long time. And in the short term, of course, that does influence confidence, and we see those headlines predicting the usual doom and gloom for the Sydney market. But I think savvy buyers and sellers move through that over time. And I think the key issue with the Sydney market, if we could just put it into one snappy little statement, is too many people and not enough houses. And I think that's really characterised the Sydney market, and the secret behind its very strong prices growth over time is the fact that we continue to underbuild, and we are that magnet for not just sort of local growth, but also interstate and international growth in demand. And I think going forward, once we move through that short-term hit to confidence in our real estate markets through higher rates, we will continue to see that. But we've come through an absolutely remarkable period of growth in Sydney. I know we're all, fixed on the election campaign at the moment, and I'm saying that with a tongue in cheek. But if we look back to the previous election campaign, which was 3 years ago, almost to the date, Sydney's median house prices actually increased by 55% in those 3 years. So if that doesn't really, sort of say it all, I'm not sure what does. I'm not saying we're going to move forward at that rate going forward now, because it was driven by sharp cuts to interest rates over that period. But certainly it does reflect the level of demand that the Sydney market has and going forward. And of course the offsets, there are so many offsets to increased costs for mortgages, which are still around record low levels. Higher incomes will offset that. And on the demand side, we have borders opening again, so obviously a surge in migration, international students coming back into the Sydney market. We've got plenty of handouts from the government. It is election time, of course, so they're supplementing incomes. And on buyer types, we've seen, again from the government, a number of stimulus packages directed towards first home buyers. And that'll continue to, I guess, allow those Australians to realise the great Australian dream. And we've had a surge in that over the past couple of years. That's eased as prices have risen. But the other key factor for demand in the Sydney market is clearly investors. We've seen investor lending double in New South Wales over the past 12 months. So I guess if that's not a clear sign of the interest in property, and why wouldn't investors be, capturing investment properties in Sydney with the tightest rental market that we've just about had in our history? It's, rents are rising, vacancy rates are plunging, and investors realise that those solid returns, not just capital growth, but also yields, are providing them with in a tight low interest rate environment with exceptional outcomes. So I guess those are some of the factors that continue to support the Sydney housing market. So we've just got to sort of work through the usual white noise that comes with higher interest rates and realise that history clearly tells us that there isn't a crash on the horizon, and that the Sydney market demand side of the equation continues to be well ahead of the supply issues.
When we talk about the demand and supply, there's a cap in the Hills Council of 5,000 dwellings. That's what they've released. That's what they want to approve. And we're just about to hit that mark. We're a few hundred off in that mark. But in years coming up, do you ever see that we're going to ever catch up to that supply? Or historically, the question is, do we ever meet that oversupply and then release again? Do we have that overlap?
I think this is a situation that's going to remain ever thus for the Sydney market. It's interesting, when we look back 12 months, the government released the Home Builder Initiative, which was a fairly popular program designed to get people particularly into new houses. And if we look around the country, most capital cities, particularly Brisbane, Melbourne and Perth, had remarkable booms in new house dwelling or new house construction, which reflects that sort of underlying demand there is for new housing. I think they got a $25,000, those that were eligible got a $25,000 deposit to build a new home. However, Sydney was the clear under-subscriber to that policy. And the reason is there's no land, there's nothing available. I mean, there's plenty of demand there for a new house in Sydney, but you know, where do you buy? And this is again reflecting that organic undersupply of the capacity for Sydney to provide new housing. And of course, what that means is people look for options. And Sydney's always been the key market for apartments. And we're seeing that now with, particularly in the rental markets in the inner city, which were suffering through closed borders from higher vacancy rates and lower rents. We're seeing that quickly readjust now. Vacancy rates are plunging for apartments in inner city Sydney, and rents are starting to rise again, and prices are rising again. And it's not just because borders are open again, it's also because people can't afford to rent a house, but they're looking at the apartment as the option to the house, sort of going forward now.
They might just have a look at the rent that they're paying, the amount, and then consider, well, maybe it's time to purchase.
That's right.
And now we consider our area and what do we want to, what do we want to live in now?
So we could wax lyrical for an extended period about the positives for the Sydney housing market, but the results really just keep speaking for themselves.
A good point. And Stu, you're literally helping hundreds of people, auctions on the front lawns of people's homes every weekend with a lot of local agents. What are you seeing with the market confidence? Are we still getting record sales as well? Lots of people?
Look, we are still getting record sales. I would say at the moment the number of bidders per auction are probably down a little bit because they're thinned out across what is a decent amount of stock right now. There are still good options out there in the marketplace. There are a lot of buyers who are putting strong offers on the table. We're seeing our pre-auction sale numbers hovering around the 50% mark. So that is to say that most auctions are 28-day campaigns, they're 4 weeks. We're finding that up to 50% of our auctions booked here in the Hills Shire are selling prior to auction for great money, which then activates that seller as a buyer, and the market continues to tick over. In short, there is still plenty of strength in the Hills District auction market, that's for sure.
So there's lots of people at open homes?
Plenty of people through open homes across all different markets. There are always subsectors within the entire ecosystem of the market. You've got new homes, you've got land, you've got apartments, you've got existing residential dwellings, and then your mansions and your acreage. They're all activated right now. It's a really interesting time because a lot of people are changing up. A lot of people are moving from that investment property, that first foray onto the property ladder, into their first full home. The people who've been in a home for the last 10 years have seen phenomenal growth in their asset wealth. They're moving into the McMansions and the bigger houses, and so we're seeing activation through most parts of the market. So a lot of foot traffic and a lot of empty shoes at front doors.
Oh, I see. But we've noticed that there's been a lot of inquiry from people in the other suburbs that bought house and land. I'll just use the southwestern example.
Yep.
And now they're cashing in, to use that term, and they're coming over to the Hills District, schools. The education's always been on people's minds for the Hills District, the open space, and the many other benefits as well. So the people are starting to cash in over there and maybe change the type of property that they're living in and come into the Hills District.
The amount of people that I meet every week who have registered to bid at our auctions in the Hills District, who have bought land out in Oran Park or land out in Marsden Park, and purely for the purpose of buy the land, build the home, build a bit of equity, sell it, and then move to that suburb that we always had our eye on but couldn't afford. And we're seeing a big influx here in the Hills District because of that.
Yeah, that's all quite positive out of the marketplace. Do you see that the vendors, when they're taking the offers before auctions, do you see that they're guided by the agents, or are they getting influenced by some, white noise as well?
Yeah, look, I mean, it is hard to turn down some of that white noise at the moment. The media is very much so skewed towards the belief that the market's going to crash and the sky is falling. I think Dr. Andrew and I have been in this game long enough to know that that the Sydney market is resilient. It's almost its own sort of beast, I guess, in the way that it functions, and our supply will never catch up with the demand. So for that reason, I still think that the agents are banging the drum of confidence. They're backing their campaigns. They're backing our district. The accessibility with the metro line, with the schooling that we have, as a district unto itself, it's very sellable. And so for that reason, we're seeing some great prices still holding up in the market.
Yeah, we're pretty close to that train station, actually, the Hills Showground, just 200.
I might have mentioned that for a particular reason, a good segue.
Yeah, that's exactly right. But you've sold with some of our clients as well, where you've sold their house.
I have.
They've moved into here.
Yeah.
So yeah, you've really seen it from both sides as well and got some feedback in that.
Yeah,
regard.
absolutely. I've actually had the privilege of representing some people who've downsized, and they've sold for the convenience of living close to the train station with a reputable builder, with a property, I guess, with the inclusions and the finishes that sets it apart in the marketplace. And everyone's been glowing and quite happily telling me, well, we're downsizing. And I've asked them, where are you downsizing to? And they've mentioned Château. So it's certainly an address that is making a statement in the area, and I think it's a combination of that price point, the location in terms of where it sits in the Hills District, and the quality of the offering that you're presenting the market.
Yeah. Well, it's good to know that people are starting to understand the differences, the point of differences out there.
Yep.
We're in the Château display suite today, Dr. Andrew Wilson, Stu Benson. We've got many different types of properties, 1 bedroom, 2 bedroom, large properties as well, also single level or 2 stories. But my question also is, what's a good recipe, what's a good formula for buying off the plan? What should we be really looking for?
Well, I think obviously that buying off the plan means you're looking forward rather than back. You're buying something in prospect. And I think it's important to understand, as we've discussed already today, the nature of the market going forward. And I think even though we've had that first interest rate increase in 11 years, and it is providing the usual sort of shock horror headlines from the media, that can tend to be a short-term break on confidence. But I think, going forward, when the realisation is that the Sydney market still maintains all those positive prospects over the sort of medium to longer term, and the fact that really we've never had a significant crash in house prices in Sydney's history, unless we want to go back to the 1800s, and I'm not sure that's relevant. But and I think that's an important sort of factor, is to understand that not just from the point of view of an owner-occupier, but also from the point of view of an investor, that property purchases are for that medium to long term. And you need to sort of take that view. So it really does become a decision once you sort of realise that that durability in the market for just choosing the particular product that suits your sort of needs.
We're seeing a lot more investors coming back into the market. First home buyers are asking a lot of questions now as well. So it's good to guide them through and have those good conversations, factual conversations also.
Yes,
yeah.
That's right.
What are your thoughts, Stu, on a good decision or recipe for buying off the plan?
Sure. Well, I mean, to echo what Dr. Andrew Wilson said, the majority of people are looking for that medium to long-term gain. So, we're not talking about flippers. We're not talking about people who are trying to pick the bottom of the market and ride out the wave and cash in. With a development like this, in a location like this, you're actually selling the longevity of living in a quality residential address. In a convenient hub that gives you rail access, what will be this alfresco cosmopolitan lifestyle of restaurants and cafes and things that are all going to be built. So look, I think in terms of the recipe, when it comes to the people that I'm talking to who are either looking at investing in a quality product, downsizing into a quality and convenient product, or people who quite simply have maybe moved away from the dream of 700 square metre block of land and having to mow a lawn every fortnight. Right. There are young couples and young executives who want to be close to the metro line because it gets them to work quickly, and they want the convenience of coming home and not having to pull a lawnmower and not have to worry about those things. So it ticks a lot of boxes, and I know it sounds very real estatey, but these sorts of living, I do think that, as we mentioned, that activation of land availability and land supply, I think we're going to see a lot of suburbs decide, well, we can't go out, let's go up. And this is going to be about the next generation of living, and we're at the precipice of that.
Well, the Hills Property Panel, thanks for joining us, Dr. Andrew.
Thank you very much,
Stu. Join us next week as we bring you more up-to-date information and give you the facts about the market.